First up, we have a story over on City AM. So this is UK fintech continues to smash records. So British fintech booms as 2019 is set to eclipse pretty much every record that we have to date. So hitting 2.9 billion so far in the first 6 months of the year. I mean, this is going rather well, isn't it?
Yeah, it is. I mean, it's the 2.9 billion that's dollars, by the way, of funding in the first 6 months of the year. Last year we had 3.3 billion in total. It does sound good. What's interesting to me is that an awful lot of that money has come from very, very few deals. So if you look at Oak North and some of the banks as well, have raised huge amounts, which is good for them and not a problem, but I think in the current climate, I would quite like to be encouraged to see money coming to new companies as well, because it's all very well having these successful companies. They've done very, very well. But if we're not getting any investment into any new ventures, then I have a horrible, horrible fear, which I'm sure won't come to pass, that we'll start stagnating a little and we'll lose that competition that we had. But generally speaking, good news. More money is nearly always good news.
In my experience, more money is always good news, yes. But you mean in this context?
Well, I mean, in this context, yes. I was thinking about some of the stories we got later on, in which case more money is definitely not good news. But
So at the one hand, fintech in the UK, but globally, is in its infancy, right? There's still lots of space for new entrants, particularly in his points like in insurtech, right? That's a huge space. But yet at the same time, what we're seeing in the UK is a maturity of the ecosystem. So people like Monzo, Starling, Oak North are now at a size where they can have very large deals coming out. And so we're just seeing more money going into a fewer handful of startups because that's where we are in the current state of play in the ecosystem. Lots of them now have had really good progress in the UK and are also expanding globally. So you see Monzo and N26 and others now going to the US. And I know that's something we'll touch on a bit later, but I think that's what we're seeing is there are still a lot of opportunities for new fintechs to come up. We are still seeing smaller deals. Yet at the same time, some of the players that have emerged over the past few years are just reaching a maturity where they get really big deals. And I think it's quite exciting to see. So
Yeah, I definitely don't think we're done yet, for sure. The retail space, SME space is kind of done a lot, but there's plenty of other different avenues of banking to kind of go after, isn't it?
Yeah, and I think that's what I would echo. I think fintech is a very broad church, and I think there are certain sub-slivers of it where the maturity, as you say, is being reached, right? Maybe broad consumer plays. In SME, business banking, certainly the broader horizontal plays, the leaders are clearly emerging. However, there are many, many other subsectors. I think insurtech was mentioned, that haven't, even reached, early stage. And I think the other thing to realize, these big players, most of them have some form of platform approach. They call it differently, sometimes marketplaces, sometimes platform. But that means product verticals. So people are very focused on sort of niche propositions, actually have a natural way of dogging onto these larger players. And therefore, I would echo the thing that will be much more disruption. And in particular, let's say in the sectors that have not traditionally got the focus within fintech and, niche sort of product propositions and service propositions that can bolt onto platforms.
But do we think that will happen here? Because in insurtech, which is kind of my sideline, my side hustle, we see an awful lot of money, but not very much if it comes to the UK. A lot of it goes to America, and places like Germany are doing very well as well. And that's my concern that I was making earlier, is that I think that I completely agree with so much more to do, particularly infrastructure. But I don't know if it'll happen here with the current set of circumstances.
I'd be interested to know how many of those big companies sort of spawn new ones, like how many of their employees go on to start their own thing, maybe in some of those gaps that they'd be noticing.
Yeah, I mean, there's definite sort of heritage of that type of thing, isn't there? There's I think, who was I was saying about the like Monzo, people from Monzo have gone on to start other things.
There's a TransferWise kind of alumni club starting, and then like Spotify and all of those.
But Bailey, who we spoke to on air the other week, seems to have been, she's moved from company to company to company, and now she's set up her own toucan.
Very true.
But like taking your first kind of point, we ran the numbers on it this morning, and only 15% of that investment came from early stage. So seed, angel, or kind of Series A. It's very much going into the hands of kind of those late stage investment. But I think someone used the metaphor last week of the kind of shoal of fish approach, where you kind of have, to your point, Oliver, that kind of, I won't use the term whale, but kind of the sort of larger, the N26s, the Monzos and the Starlings. But there's definitely still product opportunity. We're seeing it in kind of what we do, and we're seeing it in those different product verticals where you can kind of attach yourself to a marketplace. But as you say, I'd personally like to see kind of that 15% increase to see whether we're still seeing in a year's time new entrants to the market, but potentially not in that consumer-facing place.
The other interesting spin, of course, what would you say, where does the money go? Is although these are UK players, a large number of them have raised it actually for foreign plays. So, you have the Revoluts, the Monzos gearing up for, let's say a pretty tough battle with N26. And let's say in the US, the US players are not exactly waiting for them. So I think that, a lot of capital, although raised in the UK, will go that direction. And it's actually interesting how much of that remains here and benefits the UK.
Well, speaking of remaining, what do we reckon Brexit's going to do to this then? Because being in a situation where...
Yeah. Oh, what a call to make. I think that we will get investment from different places. I think where the money comes into the UK will be different lines. I think that we will be cheap for a very long time because I do not think that the pound is going to recover anytime soon, which will encourage some investment to come in. But in terms of whether the rest of the infrastructure stays in place, the talent, how the regulators catch up, that may well scare a few people off. So it's all very well having a brilliant idea here, but if you can't build it because it's not legal or because we don't know if it's legal, it's like the e-scooter thing, they're actually technically illegal, but nobody's done anything about it. Like if you're going to start a company in financial services, it's a little bit more complicated than a transport company. So I think there'll be some pulling back.
Yeah, to be fair, so like when I started out my career I was in San Francisco, and one of the key things that I learned during that is while there's a massive market in the US for fintech in particular, it's actually quite difficult to scale given the state-by-state fragmentation, given the fact that compared to the UK, the regulator here is just very progressive. They're enabling competition and innovation. The reason why you see challenger banks here and not in the US is because they've made it possible for these new tech startups to get a banking license and compete on equal footing. You just haven't seen that in the US. But if you rewind to 4 or 5 years ago when Andreessen Horowitz invested in TransferWise, I thought it was excellent because Ben Horowitz wrote this blog where he said, last year we declined to invest in TransferWise because as a Silicon Valley investor, we went to mentor our firms. We thought London was too far away. Now we realized we were wrong. And it turns out the UK is just uniquely awesome for fintech. They were the right people. They had the right company. They were getting the right scale. And so it just makes economic sense for Silicon Valley investors to invest in these London startups. And so from Barclays' perspective, now that I'm at Big Blue, what we've seen also is that same kind of feedback coming from small businesses in our ecosystem is that you can start and scale in the UK, but many of them have these global aspirations. So like today, we're introducing this Barclays Global Connect program, but really all that's about is hosting these series of events in San Francisco for businesses who want to go there, who want to build a network, who want to understand about fundraising. But I think while we have a uniquely awesome regulator here, the challenges that are in the US, but the opportunity is still massive on everyone's mind. We're seeing a lot of investors still wanting to kind of make that bridge between the two.
Yeah, it's interesting. The market's moved so quickly, isn't it? Back when they were fearful of the UK and whether the UK would, it seems like 5 seconds ago, I remember sort of US friends being like, well, there's no unicorns here. And it's week on week on week, there's change, isn't it? So, the market is moving so quickly. And actually now people are copying here from a regulatory ecosystem perspective.
Oh, yeah. For open banking, it's been massive.
But the question is, does the regulator get tangled in Brexit and give up on all that stuff? Because the regulator here is brilliant, but they already struggle with having enough resource to do everything they want to do. Now, as we have to untangle ourselves and rewrite regulation, is innovation the first thing to die? Because very sadly, innovation and R&D are usually the first thing to get cut. This is my concern. I really hope it doesn't happen. I should point that out. But that's what I've seen.
In a funny sort of way, I would echo, by the way, everything that was said. But, in a funny sort of way, I think is whether these people that are trying to do global plays, so the Revoluts, the Monzos, the Oak Norths, if they're successful of proving that out of the UK can build an international business. Because to your thing, I would have said, a few years ago, people would have said there's no unicorn. So the next one will be UK businesses can't internationalize. And if UK businesses can prove, fintechs in particular can prove that they can internationalize, so build global businesses, that will work. At the larger end, at the smaller end, I think it's all about the regulator. And the Mansion House speech was really, really encouraged. There are a couple of really exciting things coming on beyond open banking, which I think, by the way, is way overhyped, is things like giving non-banks access to the central bank. Things like, portable credit files. I mean, these are really, really things that have the potential to disrupt. And if the UK can prove that outside the European Union, it can actually be much more flexible, it could actually, at the small end, at the domestic end, attract investment. So I think there are a few things that need to come right. But I actually look quite positively at it.
All right, I'm going to try and not talk about Brexit again for the rest of it, but let's see how that goes on. All right, moving on to story number 2. So this is